actually seeing that the inflows are much faster and going into equities a lot more than fixed income. So what we've seen is the net flows through the end of April have been $83 billion. The majority of that money, $70 billion, has gone into equity exposure. We've seen fixed income taking in a much smaller amount, about half of what we did last year. And commodities have seen significant outflows. So $17 billion has come out of commodity type exposure. And what we're seeing is many people are reacting to views from the investment bank saying now's the time to be selling gold. They expect price of gold to go down. And that really is affecting the way investors are looking at investing in ETFs.
So in terms of the fixed income portion, would you say, at least in the ETF space, we are having the so-called great rotation? Because other people are saying, look, money is still going into bonds, but is it a slightly different story with exchange-traded products?
Well, I would say we haven't seen net outflows from fixed income. I think many people are putting actually cash to work and they're putting it into the equity market. When people are going into fixed income, you're tending to see that the flows have been into short term and it's been into high yield, so people looking for income. So we haven't seen net sales of fixed income. So I would say it's probably flat in terms of the flows. And what you see is the money really is going into equities. So people are looking at the positive story coming out of Japan and saying, I want to be in the Japanese market. People feel more positive about the US market and are putting money to work here in the US. People are also becoming interested in non-market cap benchmarks. So they're looking at benchmarks that might be equal weighted or might be fundamental, or they might be minimum volatility.